What a way to start a Monday. Joining us from the floor of CME Group, Knuckman and Scott Shellady here to rock it out in Traders Unplugged. Happy Monday, guys.
Good morning, Ed.
Topic number one, IPO Pigs. The $5 billion hog IPO by WH Group smells badly to some investors. What will that mean?
Well, the first thing I want to say is it's all about timing. So they're putting this out there with the all-time highs in hogs. $5 billion is a lot of money, but what's most egregious is these guys are getting a $600 million bonus in stock shares, not options, so they're getting paid out right now.
And the crime of the century is the fact that it's a smash and grab because, as we've seen, we've had more IPOs in the last quarter than we've had since 2000. So they're coming for the money, number one. Number two is, the problem is, Alan, they're going to get away with it, and they're going to get paid, and life goes on. But it was a big merger, and it probably should have happened, and it was probably good for both companies, but at the end of the day, it's egregious, and it should not happen.
And we both can't hate bacon.
No, clearly I don't hate bacon.
Topic number two, salad spinner. Produce prices are on the rise. What is your inflation temperature, and when will the market feel ill?
I think the market should be feeling ill already. I mean, if you take a look at a lot of the things that you use to get to
Lettuce,
work in the morning,
limes,
and the things on your table for breakfast, lunch, and dinner
beef
are all between 5 and 15% higher. If anybody ever would invite you out to dinner, Alan, you'd notice that the menu prices are higher now too. They're higher now than they were in 1991 when you last went out to dinner.
I'm worried about, my TV is cheaper, my vacations are cheaper, everything's, my computers are cheaper, everything's cheaper. The only thing that's not showing any inflation is wage inflation. I think that would be the only tipping point, and unfortunately, for everybody that gets paid, I don't think that's an issue at all.
Topic number three, hot and not. What asset classes are best to invest in now?
Well, there's been a complete turnover. What was great last year is terrible this year and vice versa. So I'm of the school to look to buy things that are distressed or on sale just because you have better leverage and you have less risk with greater rewards.
And that school that Alan's trying to convey to you is called the money manager, portfolio theory of money management. And the portfolio theory of money management simply says is you can't pick them. So if you're given a 20-year time horizon, if you take the top of the winners and invest them in the losers once a year, so there's not a lot of churn and burn, you have a 99.9% chance of beating the S&P or whatever the index
Dogs
is.
of the Dow, and if you look at, look at gold, that got beaten down. It had a nice healthy bounce back at the beginning of the year. Now looking at the Nasdaq, the Nasdaq was down nearly 10%. From a leverage standpoint, I'd rather be a buyer of some of these good long-term tech stocks and wait for a bounce. And technically speaking, we could see a nice big move if it recovers and gets to the highs.
Time now for your bonus round question. Monday. Who can name the most songs with the word Monday?
Monday.
Case of the Mondays?
Yep.
I
don't like Mondays.
Monday morning?
I don't like Monday morning questions.
There's Monday by the Mamas and Papas, Manic Monday by the Bangles.
That's the one I was trying to think of. I love that song.
I Don't Like
80s.
Mondays by the Boomtown Rats, and New Moon on Monday, Duran Duran.
Roll out this segment with that Manic Monday track.
I wish we could. Thanks for being on the show. Have a great Monday, guys.
Thank you.
First Business continues right after this.